YouTube channel, Equity Edge. Some of the strongest companies in India have been consistent wealth creators for its investors for decades. But right now, a few of these quality businesses are underperforming the market, and that's where the real opportunities are hiding. In this video, we'll take a quick look at the market update and then move on to the analysis of some fundamentally strong stocks that are currently available at attractive valuations. Before we talk about stocks, let's quickly understand where the market stands today. This is a Nifty 50's P ratio for the past 3 years. The median PE is 22.0 and currently it trades around 21.5, which is below its 3-year median PE of 22. This is Nifty 50's price to book ratio for the past 3 years. Median price to book ratio is 3.9 and currently it trades at 3.3, which is one of its lowest post-COVID. This is month-wise P ratio of Nifty 50. Currently, it trades at 21.48 to be precise. This is one of the lowest in the past 2 to 3 years. This means the market is fairly valued right now and not expensive. If market falls further and if there is any correction in its valuation, let's say below 20, it creates a much stronger buying opportunity, not just in Nifty but also in fundamentally good quality companies. Keeping an eye on the valuation is so important before making any investment decision. Let's move on to the first company, which is TCS. TCS is a flagship company and a part of Tata Group. It is an IT services, consulting, and business solution organization that has been partnering with many of the world's largest businesses in their transformation journey for over 50 years. TCS offering a consulting-led, cognitive-powered, integrated portfolio of businesses, technology, and engineering services and solutions. This is the revenue breakdown of TCS. BFSI, which is banking, financial service, and insurance, constitute 32.6% of its revenue. Consumer business constitute 15.9% of its revenue. Life sciences and healthcare 10.9, technology and services 8.6, manufacturing 8.5, and others constitute 23.5% of TCS revenue. Currently, the market cap of TCS is around 11 lakh crore. Current market price is 3036. The dividend yield is 1.98, which is pretty decent. The stock is now down by 34% from its 52-week high. The company has a reserves of 94,400 crores against its debt of 9,400 crores. So the debt to equity is 0.1. The company had a free cash flow for the past 3 years of 1,25,600 crores. And the net profit margin last year for TCS is 19.1%. This is the P&L report of TCS. Company was making 81,800 crores sales, which is 81,800 crores revenue in 2014. And right now, it's 2,56,000 crores. And the operating profit margin currently stood at 26%. Net profit was 19,330 crores in March 2014, and currently it is 49,500 crores. This is the balance sheet of TCS. Company had a reserves of 49,000 crores in 2014, and currently it is 94,400 crores. The debt of the company currently stands at 9,400 crores. Fixed assets was 9,500 in 2014, and currently it is 23,000 crores. Investment was 3,400 crores, and now it is 30,000, around 31,000 crores. And this is the shareholding pattern of TCS. Promoters are holding 71.77%, which is Tata Sons. FIIs are holding 11.48%, DIs 11.95%, and public holding is 4.77%. Generally, it is assumed that public holding has to be low because that shows the confidence of FIIs, DIs, and promoters in that company, right? And total shareholders in TCS is 21,64,000. This is the P ratio of TCS for the past 10 years. The 10-year median P is around 27 and currently it trades around 22, which means TCS is below its 10-year median P. Let's move on to this next stock, which is Infosys, a strong player with a long history in its name. Infosys Limited provides consulting, technology, outsourcing, and next generation digital services to enable clients to execute strategies for their digital transformation. It is the second largest information technology company in India behind TCS. Digital services, which constitute 57% of its revenue, and core services constitute 43% of Infosys revenue. The market cap of Infosys is around 5,91,000 crores. Current price is 1,400. Stock PE is 21.7. ROCE is 37.5. ROE is 28.8. Dividend yield is around 3%, which is extremely good. The stock is now down by 29% from its 52-week high. The reserves of the company is around 93,000 crores. The company has a debt of 8,500 crores. Free cash flow for the past 3 years is 76,350 crores, and the net profit margin, which is after deducting the tax and all the expenses, which is NPM, that's 16.3% last year. This is the P&L report of Infosys. The company had a revenue of 50,130 crore in 2014, and currently it is 1,66,000 crores. Operating profit margin for the last trailing 12 months is 24%. Net profit of Infosys in 2014 was 10,650 crores, and currently it is 27,300 crores. This is the balance sheet. The reserves of TCS in 2014 was 44,244, and currently it is 93,750 crores. The borrowings is 8,230 crores. Fixed assets was 8,400 crores in 2014, and currently it's around 31,000 crores. Infosys investment in 2014 was around 4,330 crores, and currently it is 23,540 crores. The shareholding pattern of Infosys: promoters are holding 14.6%, FIIs are holding 31.9%, and DIs are holding 39.4%. The public holding is 13.6%. Total number of shareholders are 25,80,000. This is the PE ratio of Infosys for the past 5 years. So currently it's trading one of its lowest PE in the past 5 years, which is post-COVID. The PE ratio is below 22, which is extremely good to start to accumulate the stock if you have conviction and do your own due diligence before investing in any of the companies that I discussed. Don't blindly buy just because I am making a video on that stock. This is not an investment decision at all. Next up, we have HCL, a strong player with a long history in IT sector. HCL Limited has focused on transformational outsourcing and offers an integrated portfolio of services including software-led IT solutions, remote infrastructure management, engineering and R&D services, and BPO. It is the third largest IT company in India behind TCS and Infosys. This is the revenue breakdown of HCL. IT and business services constitute 76%, engineering and R&D services constitute 43%, HCL software constitute 8% of its revenue. HCL's market cap is 4 lakh crores. Current market price is 1,476. Stock PE is 23.6. ROC is 31.6. ROE is 25%. The dividend yield of HCL is 3.66%, which is one of its highest in its sector. I don't think any peers in large cap IT sector has a dividend yield of more than 3.5%. HCL is now down by 26.7% from its 52-week high. The company has a reserves of 69,000 crores against a debt of 6,276 crores. This makes the company's debt to equity of 0.09 times. The free cash flow for the past 3 years is 59,175 crores. The net profit margin for last year of HCL is 14.7%. This is P&L report of HCL. The company was making 32,140 crores of revenue in 2014, and currently it makes 1,19,000 crores of revenue. The operating profit margin of HCL is 22%. The company had a net profit of 6,530 crores in 2014, and currently it makes a net profit. It made a net profit of around 17,000 crores. This balance sheet of HCL. The company had a reserves of 19,400 crores in 2014, and currently it had a reserves of 69,100 crores against a debt of 6,276 crores. Fixed assets grew from 7,440 crore in 2014 to 36,170 crore at present. The investment of HCL had grew from 660 crore in 2014 to currently at 7,560 crores. The shareholding pattern of HCL: promoters are holding 60.82%, FIs holding 18.56%, DIs are holding 16.17%, and public holding is just 4.24%. As I said, lower the public holding, generally better it is. Number of shareholders is 8,85,000, and this is the PE ratio of HCL. Currently, it's standing exactly at its 5-year median PE, which is around 23, which means the stock is neither expensive nor too cheap, but it is definitely worth started to accumulating the stock, right? It's good to start accumulating the stock if you have the conviction in the stock after your analysis. Next up, we have Sun Pharma, which is one of the market leader in, in the pharmaceutical sector. Sun Pharma is engaged in the business of manufacturing, developing, and marketing a wide range of branded and generic formulations and active pharma ingredients, which is APIs. It is the largest pharmaceutical company in India, holding an 8.2% market share. This is the geographical breakdown of Sun Pharma. India branded generics constitute 32% of its revenue, US formulations 31%, emerging markets 18%, rest of the world constitute 14% of its geographical breakup. Currently, the market cap of Sun Pharma is 3,80,000 crores. Current price is 1,587. Stock PE is 33.2. Book value is around 300. ROC is 20%. ROE is 17%. The dividend yield is 1%. The stock is now down by 19% from its 52-week high. The company have a reserves of around 72,000 crores against the debt of just 2,360 crores, which means the debt to equity of the company is just 0.03, which means the company is literally virtually debt free company. The company had a free cash flow for the past 3 years of around 24,900 crores. The net profit margin last year for Sun Pharma is 22%. It's not operating profit margin, it's net profit margin after deducting all the taxes and expenses. 22% is top notch. The sales of this is the P&L report of Sun Pharma. It had a 16,000 crores of revenue in 2014, and currently it's 53,770 crores. Operating profit margin of Sun Pharma is 30%, which is one of the highest in the past 8 years, which is too good. Net profit in 2014 was 3,880 crores, and currently it stood at 10,400 crores. This balance sheet of Sun Pharma, the reserves are due from 18,300 crores in 2014 to currently around 72,000 crores. The borrowings at present is 2,360 crores, which is less than its borrowings in 2014. Fixed assets grew from 6,800 crores in 2014 to currently at 22,600 crores. Investments grew from 2,780 crores in 2014 to currently at 18,350 crores. This is the shareholding pattern of Sun Pharma. Promoters are holding 54.5%, FII 17.26%, DIs are holding 19.4%, and public holding is 8.76%. Total number of shareholders in Sun Pharma is 7,23,770 crores. Sorry, my bad. Total number of shareholders is 7,23,770. PE ratio for the past 3 years of Sun Pharma is around, the median PE is 34.5, and currently it's around 33, which means Sun Pharma is trading below its 3-year median PE of 34.5. This shows that stock is currently slightly undervalued compared to its 3-year median PE. Next up, we have Axis Bank. This is a well-established bank in India with a track record for more than 3 decades. The market cap of Axis Bank is 3,30,000 crores. Current market price is 1,058. Stock PE is 11.8. But for banking stocks, we should not be looking at PE ratio, but price to book ratio. ROCE is 7%. Generally, for banking sector, the ROCs tend to be low, but the ROE is 16 percentage. Stock is down by 17.4% from its 52-week high. The debt is the debt of Axis Bank is around 14 lakh crores. Generally, the business of banks is to uh, accept deposits and lend loan. So the banking sector companies tend to have a higher debts. That's the reason it has 14 lakh crores of debt and the reserves is 1 lakh 86,000 crores. So we should not be looking at the debt to equity and say it is high, right? Okay, the free cash flow for Axis Bank for the past 3 years is 54,700 crores. The net profit margin, this is not operating profit margin, this is net profit margin, which is 22%, which is pretty good. The revenue of Axis Bank in 2014 was 30,700 crores and at present it is 1,28,500 crores. The other income, which is most important in banking sector, the other income grew from 7,760 crores in 2014 to 30,000 crores trailing 12 months. Net profit grew from 6,300 crores in 2014 to currently at 28,000 crores. This is balance sheet of Axis Bank. The reserves grew from 38,000 crores in 2014 to currently at 1,86,000 crores. The deposits of Axis Bank grew from 2,80,000 crores to currently at 11,71,000 crores. The borrowings grew from 52,740 crores to currently at 2,20,000 crores. Fixed assets grew from 2,340 crores to currently at 6,660 crores. The investment of Axis Bank grew from 1 lakh 13,000 crores in 2014 to currently at 3 lakh 97,000 crores in 2015. This is the shareholding pattern of Axis Bank. Promoters are holding 8%. There is a cap for shareholding pattern in banks. So generally the promoters tend to have a lower stake in the banking sector because of some RBI restrictions. Promoters are holding 8.17%, FIs are holding 43.8%, DIs are holding 41.2%, and public holding is mere 6.8%, which is pretty good. As I said, public holding generally has to be lower in good companies. Number of shareholders is 8,85,000. This the price to book ratio of Axis Bank. As I said, you should not be looking at the price to earnings for banks. You should be looking at price to book ratio. This is price to book ratio of Axis Bank for the past 10 years. The 10-year price to book median, the median price to book ratio for Axis Bank is around 2.3. At present, it is 1.8, which means it is undervalued when compared to its 10-year median price to book ratio. Next up, we have Tata Motors, which is one of the leaders in the automobile sector. Market cap of Tata Motors is 2,33,000 crores. Current price is 634. The dividend yield is 0.95%. Stock PE is 10.8. ROCE is 20%. ROE is 28%. The stock is down by 45% from its 52-week high. And it's also down more than 52% from its all-time high, which is in 2024. The reserves of the company was 1,15,400 crores against a debt of 71,540 crores. The company is reducing its debt aggressively the past 3 years. And the debt to equity of Tata Motors 3 years ago was around 2.5 times, but right now they have reduced it to 0.6 times. Free cash flow of Tata Motors for the past 3 years is around 80,000 crores. Net profit margin for Tata Motors for the last year is 6.5%. The sales of Tata Motors in 2014 was 2,32,000 crores and currently it's around 4 38,000 crores. The company had an interest of 4,750 crores in 2014, and right now it is 5,170 crores. 3 years ago, they were paying interest of 10,220 crores per annum, and from there it is consistently reducing, and currently it's around 5,000 crores. Net profit of Tata Motors grew from 14,000 crores in 2014 to currently at 21,500 crores. The company is expanding its presence aggressively in electric vehicle sector, which has a very good potential for the long term. This balance sheet of Tata Motors, the company had a reserves of 64,960 crores, and which has decreased during COVID time to the levels of 59,500 crores. And right now they have increased their reserves from 59,500 crores to all the way up to 1,15,000 crores. In fact, during 2022, they only had a reserves of 43,800 crores. Right now, it's 1,15,000 crores. Borrowings, they have decreased the borrowings from 1,46,000 crores to currently at 71,500 crores. Fixed assets grew from 69,000 crores in 2014 to currently at 1,15,000 crores. Investment grew from 10,700 crores to currently at 35,650 crores. The shareholding pattern of Tata Motors: promoters are holding 42.5%, FIs are holding 17%, DIs are holding around 17%, and the public holding is 23%. Number of shareholders is 67,53,000, one of the highest in the entire market. This is the price to book ratio of Tata Motors for the past 5 years. It is significantly undervalued when compared to its price to book ratio for the past 5 years. The reason I am taking price to book is the company was making loss during COVID time. So there'll be no earnings for the company. So the PE ratio would be negative. That's the reason, to make you understand clearly, I've taken the price to book ratio instead of taking price to earnings. So the price to book ratio in 2024, last year, it was 7.8, and right now it is below 2, slightly below 2. So very much undervalued compared to its median price to book. So we are summing up this video. Uh, Actually, I thought of discussing 20 stocks in this video, but as I don't have enough time, already it's 22 minutes length video. So this is the summary of the entire stock list that I thought of explaining in this video. So I'll just read out the stock name: TCS, Infosys, HCL, Sun Pharma, Axis Bank, Tata Motors, Nestle India, Trent, Pidilite, Lotha Developers, ABB India, Indus Tower, Persistent System, SBI Card, Colgate, IRCTC, ACC, this is ACC Cement, okay, ACC, AI Engineering, Deepak Nitrate, and IEX. So you can get all the informations in this list. I have made a clear, detailed report of this. So if you look at it: price, P ratio, 3 year, 5 year, 7 year, 10 year, median P, and market cap, RSI, how much it is up from its 52-week low and how much it is down from its 52-week high, operating profit margin, net profit margin percentage, sales growth for the past 10 years, profit growth for the past 10 years. Both these are CAGR, which means every year they have been growing at this rate. FIS, DIs, and public holdings in this company. I've mentioned everything in this list. Right? Okay, this is a summary of this video. So I've discussed the first 6 stocks, which is TCS, Infosys, HCL, Sun Pharma, Axis Bank, and Tata Motors in detail in this video. Other 14 stocks I don't have enough time, so I've given in a list format. And so if you're a conservative investor, you can ignore this 5 stocks, which is IRCTC, ACC, AI Engineering, Deepak Nitrate, and IEX. These are some risky stocks which I've included in this list. This is not too risky. It's fundamentally good quality stocks, but they are very, very volatile. So if you're an aggressive investor, you might look at these companies and analyze them, whether it's good company, then you can invest. But if you're a conservative investor, I would say please ignore the 16 to 20 companies, right? First 15 companies you analyze and invest if you feel it is good, right? If you're a very, very conservative investor, then please go for the first 7 companies. These are generally a consistent compounder and always tend to beat the market over the long term, right? So if you're a very conservative investor, don't go for the below companies, just look for the top 7 companies, right? Very, very conservative investor I'm talking about. If you're somewhat conservative, then you can look for the top 15 companies in this list. If you're also an aggressive investor, then you can look at the entire stock list of 20 companies, then analyze and invest in the company which you have strong conviction, knowledge about the sector and the industry. And if you think the business is going to sustain in the future and the stock is going to come back, then only you can invest. Don't blindly invest just because I have made a video on these stocks, right? So this is the conclusion we are talking about right now. So that's the picture. The market is currently fairly valued when compared to its history. And within the market, some fundamentally strong businesses are giving us attractive entry points. Anything below P/E ratio of 20 on the Nifty levels creates even better opportunities, both in the index level and also in these fundamentally good quality companies. Okay, a small question for you, easy question. Which stock from this list do you find the most interesting right now to consider? Share your views in the comments. And if you enjoyed watching this video, don't forget to like, share, and subscribe for more simple and clear investing insights. Thank you so much for watching. See you in another video. Thank you so much.